Welcome to this weekly update. I'm Julia Lee, an equity strategist with Bell Direct. And this week, the Australian share market has managed to record a positive performance for the week, really driven by a strong performance from the miners. We've seen the material sector gaining 4.5% for the week on the back of a weaker US currency, while the healthcare space is down by 1.5%. It, of course, has been highly exposed to currency movements because most of the revenue from the big healthcare companies are made offshore. So let's start by having a look at things from a strategic point of view, and this is from Deutsche Bank. It's made a few changes to its model portfolio, and given the interest rate hike that we saw in the US this week, unsurprising to see a skew of interest rate sensitive stocks being added and taken away from its model portfolio. Adding to its model portfolio is QB Insurance, Aurora, as well as ALQ. Taking away from their model portfolio is Insurance Australia Group, Telstra, as well as Sydney Airport. So some of those bond proxies and high yielding stocks, which may be a negative in a rising interest rate environment. But Deutsche Bank still remaining overweight miners as well as the banks. It thinks that these heavyweights in the Australian share market can rally at the same time. But looking at the industrial space, it does prefer to be light on home buyer stocks and instead prefers those industrial companies with offshore businesses and offshore heavy revenues. In terms of styles, though, it remains overweight to the value style while it's reducing exposure to the yield style, unsurprising in the type of environment that we're in. Moving from Deutsche Bank to Macquarie, which is looking at commodities, and given that commodities have rallied so hard this week, let's have a look at what Macquarie has to say. It still remains overweight in the bulks, and its preferred exposure is through stocks like Rio Tinto, South32, as well as Alumina. Some of the base metal companies that it has as an outperform include Oz Minerals as well as Western Areas. And in the gold space, it has an outperform on St. Barbara Mines as well as Alasa Gold. In fact, just having a look at the order of preferred stocks in the gold space, given that gold miners have rallied hard this week, first place is Evolution Mining, followed by St. Barbara Mines, Alasa Gold, and then Gold Road, a smaller gold company there. Staying in that commodity space and looking at thermal coal, saying that China has decided not to impose the 276-day working year. Now, in that type of environment, you would expect prices to go down, but with thermal coal, we've actually seen the opposite, and we've seen a strength in prices and prices moving higher over the last couple of weeks. Some of the reasons behind that may be because supply is tight at the moment, and despite not imposing a shorter working year for those coal miners, China is still planning to get rid of an additional 150 million tonnes worth of capacity this year. So it does look like utility companies, they're low on stocks at the moment. They're worried about prices of thermal coal, and they're trying to buy before the capacity cuts, which are expected later on in the year. Staying with mining, but now looking at mining capital expenditure, and Goldman Sachs out with a note this week saying that the bottom is in for mining capex and guidance is up. After 3 years of declines in mining capital expenditure, it thinks that capital expenditure is now on the climb. Now, it has a portfolio of international stocks that it's interested in to play this theme, but here in Australia, the stocks that it likes include Seven Holdings, SVW, and in the mining space, it prefers South32. Of course, we have seen evidence of Goldman Sachs' note in this February earnings season, and if we have a look at some of those mining services companies which are exposed to mining capex, we did see a strong performance from these companies on the day their half-year numbers were released. Downer EDI rose 13% on the day of its half-year earnings release. Monadelphous managed a rise of 12% for the day it came out with its report, and CIMIC was up by 8% on the day of its report. So it looks like the inflection point in for mining services companies, and capital expenditure should be on its way up. Now moving on to a totally different sector, and we're looking at the media space. We've seen some big movements In terms of the share prices of these media companies, and UBS just zoning in on some of those February numbers, saying that the total free-to-air audience for February has been down in Australia for the month of Feb, down by 5.3%. Yet despite this, we've seen Nine Entertainment actually increasing market share at the expense of Seven West Media. In fact, Nine Entertainment winning in all demographics and markets for February. And some of the commentary from these media companies have been positive. Seven West Media saying that bookings are likely to be up year on year, and of course with Nine Entertainment performing well, that should bode well for advertisers booking revenue in as well. Of course, these numbers are also reflected in the share price movements of these media stocks. Looking at Nine Entertainment, and the stock is up 12% in the past month. Looking at Seven West Media, the stock's down 2% in the past month. And of course 10, which hasn't been doing too well in the ratings, it's down a massive 25% over the past month. So these ratings very important for share price movements, because good ratings down the track should lead to good revenue growth and bookings as well. Finally, ending with odds and having a look at what their quant team are saying at the moment and preferred stocks in that quant space. The highest Q scores that they have in terms of crunching the numbers in the large cap space include stocks like Fortescue, BlueScope Steel, South32, Northern Star, Aristocrat Leisure, CSL, CIMIC, Qantas, Rio Tinto, as well as JB Hi-Fi. It's also crunched the numbers in the small cap space, liking Whitehaven Coal, Villa World, Sandfire Resources, Resolute Gold, Metals X, RCR, Tomlinson, St. Barbara Mines, Smart Group, Mortgage Choice, as well as Cedar Wood. So plenty of stock ideas there from the quant team at Odds. So all in all, it's been a huge week for markets around the globe, as we saw the US raise interest rates for only the third time in the last 11 years. But altogether, the market absorbed it well. The Australian share market higher, and especially the material space. That correction that we've seen in the last couple of weeks looks like it's over, and materials gaining 4.5% for the week. Hope you've enjoyed this weekly update. See you next week. I'm Julia Lee from Bell Direct.